commercial real estate space. I'm your host, Ciaara Hoffman, and on today's call, we have a very special guest, Tyler Deveraux, with the Multifamily Mindset. So, Tyler, thank you so much for being on the show, and I am rocking my Multifamily Mindset swag that you sent me, so thank you for that as well.
Welcome. I definitely noticed that right as the video turned on. I loved it. Great little touch. And thank you, Ciaara. I'm literally so excited for this one. Obviously, some background with us and, with Boyd, your husband. And so I'm very excited to be on the show. So thank you for asking me to be on the show.
Oh, absolutely. If it wasn't for you, I don't know where I would be right now today, to be honest. You're the reason that we even got into multifamily because you've known my husband, Boyd, now for, 17 years?
Geez, long time, dude. You say 17 years, that blows my mind. It probably is that long. That's nuts. That's crazy.
Literally. Yeah, a long time. So, I've known that I wanted to do commercial real estate for forever. Boyd says that, when I first met him, I told him I wanted to do commercial real estate, and that was almost, I think 8 years ago now that I met him. But, I've had this in my mind for the longest time, and I've been literally saving up for years because I knew that these training programs are pretty expensive. And this year, 2022 was like, okay, I'm tired of, waiting. This is the year. I can't push it off another year. And I told my husband, okay, I have the money ready. I'm ready to go. So let's do this. And, my husband knows people in the industry that are teaching about commercial real estate and how to invest. In my mind, for some reason, I was thinking maybe we'd get into hotels or retail or something like that. But he specifically was like, no, I'm going to work with Tyler Deveraux. I'm only going to work with him. He highly, highly trusts you, recommends you. And I didn't know who you were at that time. So he said, oh, he does multifamily. And at that time, I was pretty skeptical about multifamily. And I just pictured a really intense property management experience. So I wasn't 100% sold on it. But, we went to your training, your 3-day. And when you were talking about all of the benefits of it, things like forced depreciation and being able to scale so quickly and the syndication, I was like, okay, yeah, this is making a lot more sense than what I had previously thought of.
Dude, I love that so much. I do. And it's I can relate to it so much. So I'm going to backtrack a couple things because hearing what you said about Boyd, I appreciate that so much. I do. I've once again known Boyd for a long time. I've looked up to Boyd for the whole time that I've known him. And he's very good in the space that he is in. I've learned so much from that dude. And so to hear that, but we hadn't been in contact for that long. I've been, life gets in the way. And so to hear that means the world to me. And then I did not know that you were coming in the class skeptical. I did not know that. I didn't get that vibe. But I love to hear it because I can relate to it because when I learned about multifamily, it was the same type of thing. I don't think I was skeptical about multifamily, but I was. It was personal belief. I didn't know if it was possible. That's for sure. But I just didn't know what I did. I didn't know what I didn't know. Right.
Right.
I mean, I had some single family properties. And so the thought of big multifamily properties, all I can think of is tons of tenants, tons of problems. Once again, like you just said, property management, like how that is that going to be? But being open to learn about it is what leads you to being open to achieve new things, which is amazing. So I love that was your journey.
Exactly. And I feel like, maybe a lot of other people might have that same experience. They might not understand how you can scale so quickly, how how multifamily is just such a great partnership with people. I feel like everyone here just wants to help each other and kind of share the pie, so to speak. So can you kind of talk a little bit about, what does your portfolio look like right now as far as where you started and where you've been able to grow right now?
Yeah. Talk about all those things. So I started from really nothing, I just didn't. I had some single family properties. I had done some flips, but here's what's funny is I knew I was making a little bit of money through that, but I knew that wasn't the vehicle, right? Like you can make money a whole bunch of different ways, but for me, it was this business will never be about money. Obviously money's great. We need money. Okay. and I want money. I want more money. Like everyone does. If they tell you different, they're lying, right? But it was what that really looked like as you're making the money. It was the scalability behind it, because I was doing single family properties, but I did not see the scalability behind that at all. And I knew that from the get. I knew that I could make some money doing it, but I knew that the minute that I stopped doing it, well, then that was that. It's like the income goes away. So really, I started from ground zero, but my motivation and my urgency was massive. I had just found out that I was going to become a dad. And the only thing that I ever knew that I wanted to be was a dad, but I knew what kind of dad that I wanted to be. And I wanted to be a dad that was present. I wanted to provide for my family in all aspects, temporally, spiritually, emotionally, intellectually. And I just wasn't in that space. I wasn't in I just wasn't the person that I was hoping to be, finding out that I was going to be a dad. So that made my urgency level very, very high to find a solution. Very, very high. More than I could even begin to tell you, to the point where I go to this class like you did and I learn about multifamily. And then I continue to sell myself on this journey every single day. My biggest challenge was I did not know anybody that owned apartment buildings. Like, obviously I met people, right? But like, even as I'm meeting people, I'm like, well, yeah, they probably have some connections that I don't have, and they probably have wealthy families, and I just like, that's where my mind was going. Right. And so I just didn't know anybody that had an apartment building. So my biggest struggle was personal belief. And the minute that I started working on me and my personal belief, everything changed. And I've been able to go from, started in 2015-ish, 2014, I guess, around there. And, now have, I think it's like a little over, 3,700 something units, 350 plus million in real estate, and scaling and growing more and more from there. And I fell in love with the space, and I became very passionate about it, which is why we started our education company. So my investment company is the Multifamily MF Capital Partners. That's our investment company. That's where we buy apartment buildings just like you do, bring in investors and take these deals down. Then we have Multifamily Mindset. That's our education company. And that's where we educate new and seasoned investors on how to do the exact same thing, right? How to buy these big apartment buildings and enhance their belief and live a better life. I sincerely believe that we're a mindset company that also just happens to teach people about multifamily, because it is all a mindset. Like I told you, it all started with my personal belief, and when my personal belief enhanced, everything else went from there, grew from there. And when I look at, your other question along those lines, and you can interrupt me anytime, but you're talking about the value add opportunities, correct? And the potential with multifamily, that was the other side of the question, correct?
Yeah. So, one thing that really attracted me and kind of clicked in my brain, during your training, was the idea of forced appreciation, which, you can explain what that is, but I never knew that even existed, because I'd been I only knew the single family space. I didn't really know that you could do something like that. So can you explain what forced appreciation is and how you achieve that?
Absolutely. So you have natural appreciation, forced appreciation. Natural appreciation is single family space, right? The property just appreciates in value naturally because of the market. That is a great thing. We love natural appreciation, but we can't control that. Like I literally used to buy a property and just freaking pray that it would appreciate in value, And then we experience some sort of a dip, and it's like, oh my gosh, all that stuff's wiped out. Well, forced appreciation is literally, it's exactly what it sounds like. We're able to force the value and the appreciation of the properties. And the reason that is because a big multifamily apartment building is valued by the cash flow, the income. It's valued like a true operating business. Like it is valued, run, operated like a true operating business. So as we can increase the income of that property, and you can do that a number of different ways, and I can get into those details, that is also going to increase the cash flow, which will also increase the value of the property, which is wealth, equity wealth for you and your investors, right? So we can literally, there's things within our control that we can force. We're also, and we're also not, so in a down market, right, with single family. So I bought some single family properties right out the gates, and people told me, real estate always appreciates in value. Then 08, 09 happens. People start selling because they're getting in trouble. And because of that, because my property, single family property, is valued by comparables, comparables, anything that is sold recently in the area that's comparable to what we're buying or selling, the value of my property decreases. And it's like, well, shit.
Right.
Now I was cash flowing on some of those. So, because I had renters in there. So it's like, it's kind of a wash, but it wasn't a wash. I was upside down in value for a long time there. On a multifamily property, because it's valued like a true operating business, somebody down the street gets in trouble. They have an adjustable rate, mortgage, and, interest rates rise like they are right now. They sell because they're in trouble. That doesn't impact my property because my property isn't valued by comparables. It's valued by the operating income, which once again is just more within our control. So we can boost that income by raising rents, lowering expenses, operational policies, procedures, boosting, occupancy on the property, improving operations, all those kind of things. So it's a powerful thing, man, to literally force the appreciation instead of sit there and pray that it appreciates.
I love it. So in a way, then, is this kind of help as far as, I think right now we're probably entering into a market shift, and there's a lot of talk of, what's happening right now with interest rates and things like that. So being able to force appreciation, does that help with having more of a recession resistant asset?
Absolutely. I'm going to talk about two angles on this, if you don't mind, because we really do have two angles. We have people who already own these apartments and how that will impact them. And then we have people who are buying apartments. And obviously we're on both sides of that. We own and we're buying more. We're always buying more. We'll always own more, right? But it impacts us in different levels. So those individuals who already own multifamily assets, a lot of that is going to be determined on how the performance of that asset, I guess I should say. A lot of that can be dictated by the debt that they have in place. So let's say that, I mentioned this, but let's say that they got an adjustable rate, right? They first part of 2022, maybe the later part of 2021, or even before that, rates are super, super low, historically low. They put in this debt piece that has an adjustable rate, really low interest rate at that point, right? So their payments are really, really low. Well, now all of a sudden these rate hikes, we've had 75 basis point rate, like 3 of them at this point, I think. So they've just been climbing, right? Well, now their payment's more, and now they don't cash flow. Now that person's in trouble at this point. Now that person is going to have to sell because they're in trouble. Okay, this now person that's over here buying a property, well, that's a huge opportunity for them to come in and solve this problem that this current owner has and structure the deal in a way with a business plan that actually makes sense to take that over. Okay, this is where the opportunity comes in my opinion, because you're comparing this from natural to forced, okay? So I want anybody who's out there listening to really hone in on what I'm saying right now. Why is that important? Why can we look for opportunities and be more confident to buy a multifamily asset in a recessionary period than I can be in buying a single family asset in a recessionary period? Because we can put a business plan in place knowing how the property is valued and understand what it's at now and where the potential is, and not have to wait on the market to hope to get me there, but actually our actions that help us get there. So are there things with the market that we have to take into place as we buy? Absolutely. But there's really our demand as multifamily owners goes up in a recession, because as interest rates rise, more people are priced out of the single family market. They go into now becoming a renter. Instead of buying, now they have to rent. Those people are great renters, but our operations on that property allows us to force the appreciation. So recessions, I literally get, you just say the word recession and people get trepidatious and nervous.
Right.
Dude, I came in this business in the multifamily space in 2014, end of 2014, beginning of 2015. And it had been, a pretty steady climb, the whole time. 2020 was really that first dip. But that's when I doubled down, is at that point. Like literally that is when I doubled down and literally doubled, tripled our portfolio at that point. Because as people got nervous, we didn't get nervous. We looked at the controllables of what we could control. We went full force in, and that was a separator for us in our business. And it will be a separator for anybody else out there who's buying right now in a recessionary period with multifamily assets if they focus on the controllables. It's an exciting thing.
Perfect. So can you talk about some of those things that we can do on how we can increase our net operating income?
Yeah, tons of ways. It's one of the, I believe that I kind of geek out over this stuff, Ciaara. I do, because it's fun to get creative, you know? Like most, just a regular person, okay, how do I increase the income? Well, I'm going to raise the rents. That's like when somebody's talking to me about it, they're like, well, okay, great. Like, how do you feel about going out there and raising rents in an environment like this, right? And, which I just kind of laugh because I feel great about it. Why? Because I know the value that we provide on an apartment and the value that provides to tenants and actually the investors who invest, both sides. But there's way more ways that you can boost your net operating income than just raising rents. I can lower expenses, which is just better operations. I can increase occupancy, which is really the number one reason that people move out of an apartment is people not handling maintenance requests, which means they just don't think that the owner cares. So we can come in and put in operational strategies, and I can get into some detail if you want me to on those, but operational strategies that improve the community, the environment at the apartment, that will naturally drive rents, drive occupancy and renewals. And when somebody moves out, it's one of our biggest expenses. So if I can reduce that, well, then naturally our expenses go down and our income goes up. We also have, like on these bigger properties, we also have they're called NOI boosting opportunities. So we're talking paid parking. We can offer valet trash. We can put in vending machines. We can do satellite cable. We can do laundry. There's a myriad of different opportunities, NOI boosting opportunities for other income on these bigger properties. And so tons of different ways to get creative. It's one of my favorite things to just kind of brainstorm and talk about with other operators. It's like, okay, what are you doing here? What strategies are you implementing here? How does that apply here? I look at my competitors and what are they doing that I'm not doing? How can I capitalize off of those things? It's fun for me.
Awesome. And you mentioned something that I want to expand on a little bit. So you mentioned, having a tenant leave and having to find a new tenant it's costs a lot of money. But also, in my mind, I'm thinking, well, renovating it and putting maybe a new tenant with a higher rent may also be more beneficial. Can you talk about, is it better to kind of keep the tenant in, or is it better to renovate and start charging a higher rent, and, kind of the pros and cons of that?
Yeah, both of those things are great, right? We want to be able to do both, because if every tenant moved out every single year, it's a lot of turnover. Okay, so there's going to be time where there's lost rent. And that's what people miss, is the lost rent during the turnover period. Then we're injecting capital in to renovate the interior and bring it up to market rents, right? Now that's a beautiful thing, because now you're charging more for rent. But you want to balance, right? Life is about balance, and our apartments are about balance, because when somebody renews their lease, we're still bumping the rents. But okay, so I'll give you an example. 40-unit property. A 40-unit property. It's one of my favorite ones. I love this thing. It was a number of years ago, but it was in Mooresville, North Carolina. And we bought this property. 100% of the tenants were month-to-month tenants, which means they could vacate at any point, okay? Well, we go in and we start to do these lease renewals. We start at 50. That person renews. Then we go to 75, then 100. Okay, we hit this breaking point. $150 lease renewal is what encouraged them to vacate, that first person. But we already had in our budget where we knew that once somebody decides not to renew, we can come in and we can turn that into a premium product. So put in vinyl plank flooring, sand down the cabinets, paint, put some new hardware on there, maybe overspray the countertops, put in some appliances, maybe some new carpet in the bedrooms, paint, vanities, those kind of things. Pretty small injection of capital. We're probably talking about $3,500 per unit at that point to bring that to a premium product. But that allowed us to increase our rents by $300 per month. And that was out the gates. That got up to about $400 per month for a premium product within the first year. So a lease renewal, right, give us $150 rent bump, maybe $125 because 150 is when they typically vacate per month, but really no capital injected into the unit. But they move out and we can inject $3,000, $3,500 in and bring it to $300 to $400 extra per month. That ROI is crazy, but it's this balance, right? You want we're looking at about 30 to 40% that we would like to turn over into a premium product each year. The rest we would like to renew. That's typically what we target. So,
okay.
Hopefully I feel like that was a long answer to your question. Hopefully it answered it.
No, that did. That made a lot of sense. So I appreciate that. Now kind of switching gears a little bit here, and moving on into 2023, with what we're seeing, what you're foreseeing, how is 2023 going to be different from what we've been seeing in, 2020, really the last, since COVID, I would say is kind of, we've had this kind of a bull run. We're obviously heading into a market shift. How are your feelings about where we're going to be heading into the new year? And is your strategy changing at all?
Strategies are always changing. This is a great question. The strategies are always changing. Like, we're literally always looking, I call it a CMA, a comparable market analysis. And then we're looking at what's going on within the market. We're also looking at our risk return for our investors, right? So what's the risk of holding or exiting versus the return from exiting or holding, right? So we're always looking at our business plan and dialing in our business plan. When we go into a property, first off, we create a business plan. Right? If it's going to be a 3 to 5 year hold, say it's a 5 year hold, we put in a 5-year business plan. But the only thing we know for sure is that business plan is going to change. A lot of stuff changes in 5 years. So we're always looking at different strategies as we go throughout, always. So I talked about individuals that we already own these apartments, right? And then people who are buying. So these apartments that we own, we're always looking at, should we continue to hold or should we sell? Well, we have good debt pieces in, no adjustable rates. So as things cool down, we'll hold. We're cash flow positive, we'll hold. I'm not saying that the market won't correct, it will correct. What I'm saying is that I'm in it for the long game. I know that we can weather the storm by playing the long game. And real estate is the long game. Now, the short game, though, and how 2023 will be different versus 2022. 2022, well, I'll say it from 2021, 2022, we were buying a bunch of properties. We exited a bunch of properties, shorter hold periods. Why? It's because that's the market cycle that we were in. There was still a lot of demand, tons of demand, okay? And so we were able to buy, force the appreciation, benefit from natural and forced appreciation, which just doubles up on everything, and then exit quicker before things started to shift. Now, listen, we exited a little over $100 million of real estate. We exited in 2022, the first part of 2022. Now, do you remember when rates started to increase? Do you remember when that was?
Yeah, that was probably, I want to say around maybe March of this year.
Yeah, second quarter of 2022 is when they started to rise. Well, we exited before they started to rise. That was not by luck or, it wasn't by luck. It was by design. It was very strategic. Nobody has a crystal ball, okay? But we definitely we had these historically low interest rates. We projected that those would rise, which means if we're going to exit and truly capitalize off top dollar, the time to exit was first part of 2022, which is why we did that. Okay, now we've bought assets throughout 2022, but with a different business plan. Instead of a shorter hold, definitely a longer hold. Okay, instead of one asset, we're diversifying it in a fund through multiple assets, right? So that we can leverage and have less risk, more opportunity for reward over multiple assets. That same strategy that we've implemented in the bottom half of the later half of 2022 will continue throughout 2023. 2023 is going to be one of the biggest opportunities that we've seen as investors since 08-09. I believe that absolutely to my core. So strategies for me is going to be different than strategies for a lot of newer individuals coming in. Strategies for us, I'm just telling you, we will be leveraging the capital that we have, which is a whole bunch of capital, to go in and negotiate with these sellers, get creative with these sellers, creative financing to be able to take down these deals. The strategy for somebody brand new coming in who doesn't have the relationships we have, build relationships, because really I believe that tailwind will start to come Q2, Q3 of 2023. That's when the most amount of sellers, no crystal ball, just this guesstimation, if you will. Q2, Q3, that's when the most amount of sellers will start seeing the most amount of problems. And that's opportunities for us to buy. So as we can build our teams, build these relationships right throughout this first and second quarter of 2023, you will cash in massively in 2023. And I also believe that in Q4 of 2023, rates will be low again. Why do I believe that? Because there's an election and rates always dip in an election. And then, okay, so now you buy some properties and now you can benefit from these sellers who have problems. We can come in and put better debt in. And dude, that's how you scale your portfolio and really capitalize. Like individuals who, if it was only going up all the time, it'd be very hard to really scale and catch up. Okay.
Yeah.
It's when there's a dip that everyday investors like you and I and most people listening to this really start to scale and grow, which I'm freaking excited about.
Yeah, no, that's really good news. It's making me excited. And, I feel like it's a good time for, myself and maybe some other newer investors that are thinking about getting into the business around this time period. So I think that's all really good news. And so you mentioned, I guess, longer hold times. So what does that look like? Is that a 5-year hold? Or are you thinking maybe a longer hold time than that even?
Yeah, I think even longer, because I believe that even though I believe interest rates will dip back down a little bit at the end of 2023, they're going to go back up. I believe they'll go back up. Right now, people think that interest rates are the problem, and it's really not. I mean, interest rates feed the problem, okay? But you have interest rates so higher interest rates and lower cap rates. And for anybody listening, the lower the cap rate, the higher the purchase price. Okay, so those two mixed together, a higher purchase price because of a low cap rate and a high interest rate, make for a payment that's very hard to cash flow, with that payment. So I believe that cap rates will start to expand. I thought that they would expand as interest rates started to expand, but they really haven't followed that trend. They just really haven't, but they will start to follow that trend. I believe that to my core. And so they'll start to follow that trend. And so this, instead of compressed cap rate, we'll start to see cap rates get back up to a healthier position where they really should be. So yes, interest rates, I do believe, will dip and then start going back up. But the long-term game is to hold that thing long-term. So think about this. If you can come in and grab a debt piece right now at 5.5%, 6%, and that's what commercial debt is right now about this interest rate. Single family is closer to 7, low 7s. But commercial rates are better rates. We're able to come in and lock something like that with our investors. Listen, our investors right now just got lambasted. If they have Bitcoin, crypto, they've just been freaking lambasted. Stock, they've been lambasted. They are looking for a safer place to place their funds. And there are few things that are safer and more stable than a hard physical asset like an apartment building. So now they're able to inject this capital in. We're able to play this long-term game to where interest rates rise, and then they start to trend back down. And I'm telling you, that's now where you benefit from not only all the forced appreciation that you've caused on your apartment, but also the natural appreciation. But you do that because of where you're buying right now in the cycle. Does that make sense?
Absolutely. Yeah, no, that makes a lot of sense.
Longer than 5 years. So usually our hold time would be 3 to 5 years in the type of cycle that we've been in, maybe even shorter than that. Now 5 to 7, even 10 years is what our business plans are projecting out.
Okay. Awesome. Good to know. So I'm pretty new to, this industry. So that's good to know that there are going to be changes in the length of time that we're going to be holding these properties. So kind of, we're hitting up on.
I was apprehensive. Sorry, I was nervous to see how my investors would react to that, because we've done shorter holds. One of the first things that investors ask is when do we get the money back, essentially, right? When are you going to recapitalize? When do you exit? And so I was apprehensive to see how they would react to a longer hold. Honestly, the reaction that we have got, we have a pretty good investor base, is like pumped about that. It's almost like they've had so many buy, drive up, exit. It's almost like they don't want to continually make those decisions again. They want to put something in that's going to cash flow long term, give them massive tax benefits, and still see the long term growth. That's really what they're looking for. And so, as an operators, we can come in, we can provide that to investors. So valuable to investors, especially in the industry that we're in right now, the market that we're in right now.
No, that's great to hear that investors are on board with that longer hold period as well. So kind of to finish things off, what are some final words or the biggest piece of advice that you'd give to somebody who is brand new, starting out, and wants to get into multifamily today?
It's a kind of a loaded question, right? Biggest piece of advice, but I will tell you that you had mentioned when we chatted, off camera, that mindset is so important, right? And that you know this about me, that I talk about this all the time. And I talk about it because I really sincerely believe to my core, everything within my core, that that's the separator, especially in a market that we're going into where there's a lot of fear out in the market, right? So if you feed into the fear, you'll be very uncertain and you'll have a lot of self-doubt. And there is nothing that is the biggest killer of anything is self-doubt. It's the biggest killer of anything. Anything. So if we can eliminate self-doubt, how do we eliminate self-doubt? So this is my advice, right? You eliminate self-doubt by working on you. If you don't know what to invest in, you have to invest in you. I believe that there's 3 critical aspects of anything that we do, right? There's the experiences that we gain through life. There are, faith comes into this, and then there's also challenges that we see. And so if you look at those 3 as this pinnacle, right? Experience, true confidence comes from experience. That's what it comes from. You can learn from other people. You can hear about all the things that they've done. Shit, dude, somebody can listen to this and be like, man, okay, awesome. Great. Ciaara and Tyler are freaking crushing in this multifamily space. And maybe it gives them some temporary confidence, right? But true confidence and lasting confidence comes from experiences. But people are apprehensive to take the steps needed to gain those experiences because they know that there's going to be challenges. And listen, challenges are going to come. I just want to be very, very clear with you. Challenges are going to come no matter how prepared you are. You can try to prepare and prepare and prepare and prepare. And I promise you are not going to eliminate every single challenge. I was on with a coach before this call. I was on with a mentor that I have, and we're having this call, and he's talking to me about, and we're talking about scaling both businesses. And he's talking to me about trials that he experienced when he was scaling his business and how he ended up losing that business. And I'm listening to him go through these experiences, and I'm obviously learning from those experiences, and that it's helping me avoid the same pitfalls that he fell into. But ultimately, it is my job to go execute on the things that he taught me with massive amounts of certainty, if I'm going to gain traction and continue to scale. Even with all the things that I learn on a day-to-day basis from these mentors and these coaches that I personally have, there's still going to be challenges. So we have to be prepared for those challenges, right? But we can't over-prepare. We have to go take action and gain experiences to gain the confidence. And this is where faith comes in, right? This is where faith comes in, because at any time as you're working through this, there's going to be some times where you have to lean on that faith. And this is where I believe that, and when I say faith, I'm a pretty spiritual person. So I believe in a greater power. I do. And I believe that that greater power wants the best for me. And I believe for everyone. I believe that to my core. But I also believe that we have to actually believe that. And it comes down to ourselves, right? Our personal belief. Because you can want somebody so badly for somebody else. You can want something so badly for somebody else. Like I look at my kids. Man, I can want things so badly for them. And I can teach them, and I can try to guide them, and I can, give them opportunities, but they have to be the ones that grab the freaking bull by the horns and go do it and implement it. And it's going to take faith to implement that. I look at my little boy. His name's Paxton. He's playing football right now. It's his first year to tackle football. And your first year of tackle football it's challenging because you don't have the experience, and your faith is limited, dude, because once again, you don't have the experiences and you haven't experienced these challenges and you haven't overcome these challenges. So we talk about tackling, right? And when you're tackling, the way that you're going to tackle or the way that you're going to break a tackle is the person that is going the fastest, the person that is literally going all in with that. The person that hesitates dies. You hesitate and you die, right? It's a motto in our home. You hesitate, you die. So you don't hesitate, but that takes a lot of faith to be able to do that. And I remember having this conversation with him because I see him going just being trepidatious as he's going to tackle, very uncertain. So his ass continually get trucked over and over by those people who were not uncertain, right?
Right.
So like, bro, I just like literally pull his mouthpiece out, look him in the eyes. I'm like, dude, do you trust me? And he's like, I don't know. I do not. I'm like, probably a good choice. Okay? And I'm like, but buddy, do you trust me? What's my job? Who loves you? Who loves you more than I do? Besides mom, who loves you more than I do? Nobody. What do I want from you? You want me to be, you want to protect me. You want me to be happy. Yeah. What's my job as a dad? To protect you or to protect me. That's it. Would I ever do anything that's going to put you in harm's way? No. Okay. So I need you to, when you go in this tackling drill right now, go as fast as you possibly can. Now there's going to be times when you do that you're going to be nervous and you're going to be thinking, this is crazy. I got to slow down. But if you will just trust me one time and go as fast as you can, will you do that? Yes, I'll do that. And what does he do? He goes as fast as he can against the kid's name is CO, and CO is a big freaking kid. And Pax trucks CO because he had enough faith to actually go all in, man. That's what it takes, is to go all in. And then when you do that, your faith increases. The problem is if we don't continually take these actions that gain us experience and put us in this opportunity to have challenges, our faith never increases. Our belief never increases. But the minute that we put ourselves into these opportunities and lean into faith, we gain experiences, we overcome challenges, and our belief enhances. So the biggest advice that I'd give to anybody is freaking lean in the discomfort that you see right now, lean into the fears, and go gain the experiences that are going to massively increase your confidence. And you will never regret doing that, ever. Everything, anything is able to, there's always a second chance. There's always a way to pivot and grow. Always. But if we don't believe that, then we will never pivot and grow. But there's always a second chance. Nothing is finite. We have to understand that, but we have to make decisions with certainty as we go into anything. So that's my advice.
Wow. Thank you so much, Tyler, for being on with us today. I've learned a ton, so I know that our listeners have learned a lot as well. So where's the best place that people can find you online if they want to learn more about you?
I'm anywhere on social media. Tyler Deveraux, Deveraux. You can look up our company, which is the Multifamily Mindset, or MF Capital Partners, Multifamily Capital Partners, YouTube, Instagram, LinkedIn, Facebook, whatever it is. But can I tell you what I really think that they should do? They should connect with and look you up, man. Because listen, you came into the class that I taught in Pasadena, and I didn't know you were skeptical because you came in, and I know that Boyd's ass, your husband, was out in the hall the whole class. But you were there religiously taking notes. And then I've seen what you've done after attending the class. You've traveled to these different locations. You've met with these different people. You've networked. You've done this research. You've started this podcast. You've put yourself in a position to benefit from everything that we're about to experience. And that has been very strategic on your part, not by luck. It's been strategic. And I respect you a ton because you're one of the few who actually do what I just talked about, which is lean into the discomfort, embrace challenges, gain experiences. They should be connecting with you, every single person listening to this, as much as possible, because you are a freaking rock star. And that's why I was so excited to come on your show. So I appreciate you.
Wow. Thank you. I wasn't expecting that. So thank you so much. I really appreciate the feedback. And thank everyone for tuning in today. If you enjoyed today's show, please write us a 5-star review on Apple Podcasts or Spotify. Every review helps us to be able to reach more and more people and help them start their career in commercial real estate.
Hey, let me hone in on that too. You definitely learned something today. So you better go give a good review. You better share. Do not be a podcast whore and just sit here and just take it all in without sharing it. You go share Ciaara's show right freaking now, or else I'm coming after you, okay? All in, coming after you. Full force.
Love it. Love it. Thanks so much, Tyler.
Thank you, Ciaara. Appreciate it.
Today's show was sponsored by Synergy Capital Investments. To download your free multifamily investment guide for beginners or to schedule a call to learn about our upcoming investment projects, go to thrivewithsynergy.com. That's thrivewithsynergy.com or click on the link below.